It's another time to do 55 minutes journey around the world of business right here on Business Incorporated. And we have something prepared for you, beginning with what's going on in the central banks globally. Global central banks are favoring gold now for their reserves. I wonder if Nigeria is part of that. Not a very good one for South Africa. The first quarter, their GDP dipped 0.1%. And then in Kenya, the Eurobond repurchase is on, and they're aiming at about $1 billion. Welcome to the program. I'm Ini John McCoy. The program is Business Incorporated. But before we head into the world of business, we'd like to give you an update of that unfortunate incident in Niger State with the miners right there. We can tell you at this time that our efforts are ongoing to save more trapped miners in that. About 30 miners are trapped when an artisanal mining pit collapsed in Niger State. At least one has been confirmed dead. Reports say the efforts have been hampered by threats from armed bandits operating in the region. Dozens of miners employed by a local mining company were working late on Sunday in a huge pit in the village of Galkogo in Shiroro district when it fell in and trapped the miners. Unfortunately, there we will bring you updates as the story unfolds. Now, heading to the world of business, we start from the global space. As usual, that oil prices extended losses slightly from the previous session in early Asian trade on Wednesday after an industry report showed bills in the U.S. crude and fuel stockpiles adding to concerns around demand growth. Brent crude futures fell 14 cents, that's about 0.2%, to $77.38 a barrel, while U.S. West Texas Intermediate crude futures also dropped 18 cents, that's about 0.3%, to $73.07 a barrel. Both benchmarks fell nearly $1 in Tuesday's session and around 3 on Monday under pressure after the OPEC Plus group detailed plans to increase supply from October onwards, despite recent signs of weakening demand growth. Gasoline stocks also rose more than 4 million barrels, which was a much bigger build than the 2 million barrels increase analysts had expected. Now, the U.S. Energy Information Administration will publish stockpiles later on today. Still in the global space now, but looking at metals, gold prices rose slightly on Wednesday, helped by lower treasury yields, but were stuck in a tight range as investors await more U.S. data to gauge the Federal Reserve's next step on monetary policy. Gold was up 0.3% to $2,334 per ounce, trading in a narrow $11 range. After prices fell 1% in the previous session. U.S. gold futures rose 0.3% to $2,354.50. Other metals, we see spot silver up 0.7% to $29.69 per ounce. Platinum also gained 0.6% to $992.85, and palladium also gained 0.9% at $923.83 per ounce. Well, still around metals now, net purchases of gold by global central banks went up to 33 metric tons in April from a revised net buying of 3 tons in March. The World Gold Council gave this, signaling continuing strong appetite from the sector despite high prices for the metal. Safe haven demand driven by geopolitical and economic uncertainty, as well as persistent central bank buying, contributed to March to May buying, and the spot price hit a record high of $2,449.89 per ounce. Demand from global central banks for gold has been elevated for 2 years as they diversify their foreign currency reserves. A survey showed that central banks plan to continue to increase their exposure to gold. In April, gross gold purchases by central banks dipped to 36 tons from 39 tons in March, but gross sales saw a drop to 3 tons in April from 36 in March. It revised the March net purchases to 3 tons after the Central Bank of the Philippines reported a sale of 12 tons. But still staying in the global space now, public debts rose to a record $97 trillion in 2023. And this is according to the United States Trade and Development, with developing countries owing roughly 1/3 of that crippling their ability to pay for basic government services like healthcare, education, and climate action. This figure indicates an increase of $5.6 trillion from the previous year, 2022. In a report titled A World of Debts, the agency said high interest payments are outstripping growth in essential public spending, and this may be forcing developing countries to choose between servicing their debts or serving their people. The United Nations institution is asking that financial architecture must change to ensure a prosperous future for both people and the planet. Furthermore, in the developing countries, which is home to 3.3 billion people, 1 in 3 countries spend more on paying interest rate than programs in critical areas for human development, such as healthcare, education, and climate action. In 2023, public debt in developing countries hit 29 trillion naira. That's about 30% of the total, an increase from 16%. And also have the United States at $33 trillion, China $15 trillion, and Japan $10.6 trillion. Now we come home to Nigeria, where Nasima is talking about that minimum wage, which is a hot topic at this time, even though there's a bit of relief, temporary relief, one might say, as the labor unions put a pause to the industrial action, which started on Monday. Nasima is also sharing its perspective on how the minimum wage should be approached and what could be a fair wage for the workers.
I understand the labor's viewpoint, but we have to be conscious of some deeper issues also. You know, labor cannot be speaking as if government is the sole employer. We know from our viewpoint, right, we are aware of several organizations that have either descaled, closed shop, or thinking of moving or moved. So we have to think, they are grappling with enough challenges as it is, rising energy costs. You know, the cost of finance has gone up. Loans are between 30 and 40%. So, I mean, infrastructure hasn't really improved. You know, so those basic things are there. So now, of course, a minimum wage issue will come. Cost of labor will also rise. They can only pay out of what they have sold.
It's an ongoing conversation in the country, reaching a new minimum wage that will be sustainable, both the private and the public sector. And of course, the subnationals, that's the states, they're also very much in consideration here. Now, the managing director of the Nigeria Deposit Insurance Corporation, Mr. Bello Hassan, has disclosed that the total bank deposits at Heritage Bank stands at 650 billion naira, while its loan portfolio stands at over 700 billion naira. He assures that the NDIC is looking for ways and ensuring that the loan repayment would be within the next 6 months. Mr. Hassan says all depositors are currently being verified for onward payment of insured benefit of 5 million naira, while depositors with insured deposits above 5 million naira will be paid upon the sale of the assets of the bank. There were about 116 branches of Heritage Bank across the country, and total depositors at 2.3 million, while 99% of them having total balances of less than 5 million naira. Now we'll stay on that issue for now, following that liquidation of Heritage Bank. The central bank yesterday had to assure Nigerians that there are no plans to revoke bank licenses, other bank licenses in the country. Also, there was the story of First Bank having received the full repayment of 456 billion naira loan extended to Heritage Bank. And this was done before this liquidation. And troubles, a little bit of background now for Heritage Bank, started about 2019 when it faced severe distress and appeared on the verge of collapse. However, under the former administration of the central bank, Mr. Godwin Emefiele, the CBN pursued a policy of not allowing banks to fail, supporting Heritage Bank through various measures. That's where First Bank came into the picture. But now let's see what vibes this is sending to the banking industry at this time with financial expert Kelvin Emmanuel joins us from our Abuja studio. Hi, Kelvin. Good afternoon.
Good afternoon. Thank you so much for having me.
So a whole lot of, assumptions, consequences of this revocation of Heritage Bank is taking place. And, we've seen what is happening even to the banking stocks. It's gone that bad. But there's this story with the policy of the former CBN governor of not allowing banks to die, which is why we have First Bank coming into the picture, to help Heritage Bank. But at this time, it seems the current governor is facing another side. I wonder what financial experts are saying about these two different perspectives of the different governors of Central Bank of Nigeria.
Yeah, thank you. Thanks for having a very interesting topic. I think it's been a very long time since we've had this kind of situation with the banking sector. And I've heard quite a lot of views. Some people that have said that the government should immediately guarantee all depositors. The top 54 depositors in Heritage Bank hold 404.3 billion naira of the 650 billion naira in total that is held with the bank. The NDIC says that they've released a statement to say that anything of 5 million and below, they will immediately start payment to alternate accounts. And then above 5 million will be subject to liquidation and unwinding of the assets of Heritage Bank. But it's also very important to mention that Access Bank had asset and liability losses, mark-to-market losses of over 400 billion. And when you look at the shareholder capital at 53.9 billion, you look at the shareholder capital to deposit ratio, shareholder capital is anywhere between 8.5 and 9% in terms of the gearing ratio, which is the shareholder to depositors funds held in the bank that is very poor. And it's one of the reasons, for example, why the central bank released recapitalization guidelines for banks to be able to improve their gearing ratio and improve the minimum capital that is placed with the central bank as an insurance against events like this. I don't quite agree with the thinking that banks should not be allowed to fail, because I am of the view that despite the fact that we need a very strong financial sector that is stable to drive economic growth, I'm of the view that we need fewer banks that are strong. In the US, for example, within the last 12 months, we've seen the Federal Reserve, the Federal Deposit Insurance Corporation, the Consumer Financial Protection Bureau supervise the acquisition of Silicon Valley Bank and First Republic Bank that failed to other banks. So the question was, despite the fact that First Bank in 2019, which is a GSIB, systematically important bank, because banks have classification based on their financial health, and based on their capital adequacy ratio. In Nigeria, for example, banks that have total capital over total risk-weighted assets at 15%, they are called Tier 1 banks. Banks that have total capital over total risk-weighted assets at 10% are called Tier 2 banks. And then you have the Tier 3 banks. And Heritage fell under the Tier 3 category. First Bank in 2019 as a bank of other banks that provides clearing services to other banks to enable settlement for interbank operations, provided a backstop in 2019 of 247 billion naira to Heritage Bank. And that was because in 2019, the immediate past governor of the central bank had issued a letter of comfort from the central bank to First Bank to provide that clear money, like a backstop for clearing services, so that interbank operations and settlements are not disrupted. So it's been a case of them managing a very bad situation for 5 years. The question is, why did the central bank allow the situation to continue for so long and not supervise the process for either another bank acquiring Heritage Bank and assuming all their assets and liabilities? So for me, in my opinion, despite all we've heard, I don't think the way to go is for the federal government to have AMCON, Asset Management Company of Nigeria, that currently holds about 5 trillion naira on its balance sheets in liabilities, to continue to soak up more debt, especially when you consider the situation we have in the economy today. AMCON is supposed to have been unwinded since 2011 based on the AMCON Act that says that it's not supposed to exist for more than 10 years. I don't think the situation is to have AMCON to come backstop Heritage Bank and prevent it from failing. I think it's a good thing that if the bank is not properly managed, it goes into liquidation, and the important thing is for the central bank to supervise the process to ensure that you don't have a situation where everybody is caught unawares and you wake up one morning and you see a circular from the Central Bank of Nigeria. In fact, personally, I've had a few friends who have come to me to say they have monies with Heritage Bank that is above 5 million naira. So, it's interesting to see how this is going to play out in the coming months.
Yeah, NDIC says for people of that category, burning more than 5 million naira, they will have to wait for the assets of Heritage Bank to be sold. And, of course, that puts a lot of depositors in that category in an uncomfortable place, because you don't understand how long the process is going to take. And, even the issue of verifying customers, which the NDIC has said, that also doesn't sit comfortably, with a lot of people, because, what will I need to do? How am I sure I will go through, even if I'm really a customer, a legal customer of Heritage Bank?
I have full confidence and faith in the work and activity of the Nigerian Deposit Insurance Corporation. There are always that institution that is behind the scene, and looking carefully and ensuring that the system is being run properly, in coordination with the Central Bank of Nigeria. I have full faith in them supervising the process of ensuring that funds are sent out to alternate accounts, first to depositors who have below 5 million, and then upon liquidation, to unwinding of the assets to depositors that have above 5 million. I mentioned that the top 54 depositors in the bank hold 404.3 billion naira in the bank. I don't have any doubt. And also, the rumor and fears about Unity Bank, Polaris, and I think a third bank, I think they're unfounded, because I don't think there is going to be any such situation where the central bank will have to revoke the licenses of these 3 other banks, as is being rumored in the public. When the CBN released recapitalization guidelines, I immediately stated that, listen, this is a season of mergers and acquisition. So other than the fact that Heritage Bank has failed and they've revoked their license, I see Tier 2 and Tier 1 banks swallowing Tier 3 banks going forward. At the end of the day, when the recapitalization is concluded, you're going to see a leaner banking sector, but a more strong and sound banking sector. I don't have any doubt in the faith and ability of the NDIC to do their work.
But, investors are not so comforted. That's why we saw what happened to the banking stocks yesterday. And even the CBN, of course, had to send that extra circular to say there are no plans to revoke any other license of any of the banks at this time. But how do we calm the nerve of investors, especially because the recapitalization is here, and you do need investors to, put their monies into these banks?
As a matter of fact, I think it's even the other way, and I'll tell you why it's the other way. Listen, the fact that Naira has dropped 92% in the last decade, right, owing from activities on ways and means, and the government drawing on central bank overdrafts without assets and reserves to back, and you've seen quantitative easing run riots, you've seen inflation and the hike of MPR and all of that, has affected the asset quality of banks. 10 years ago, 50 billion naira, which is the minimum capital for a tier 1 bank in Nigeria, was anywhere around 350 million US dollars. Today, the same 50 billion naira it's less than, it's somewhere anywhere around $33 million. It's dropped. The asset quality of banks have dropped nearly 85 to 90% in line with the currency drop. So you need more healthy banks. I think it's a good signal for investors, because if you're asking investors to bring in money into Nigerian banks, you're asking an investor to bring in $1 billion. They're looking at the health of the banks. They're looking at the total capital over total risk-weighted assets. They're looking at the minimum capital, the gearing ratio, the shareholder capital to depositors funds. They're looking at all these metrics. So I think on the reverse, for institutional investors, it's the reverse of the fears that a bank being allowed to fail by the central bank, and the central bank, most importantly, supervising the process based on the act that governs the NDIC to ensure that there is no fallout and people are not bitter, and it doesn't lead to outsized losses, is good for the health of the financial system. Because if you allow a bank that had over 400 billion naira mark-to-market losses in the asset and liability management, and they have to borrow over 400 billion from another bank as a backstop to provide for clearing services for interbank operations, then you're basically saying that the CBN is saying that this bank is healthy and companies can go and do business with them, and then it might result in this kind of situation we have. So I don't share the perspective that, the CBN shouldn't have allowed it to fail, and the CBN should have provided a backstop. The CBN did provide a backstop in 2019 because they did provide a letter of comfort. Without that letter of comfort, First Bank wouldn't have pumped 247 billion naira for them to do clearing services. But it is what it is. Business sometimes goes well, business sometimes doesn't go well, especially depending on the management team of the bank. So there are many other banks in Nigeria that are in very sound health, and the fact that the CBN has released recapitalization guidelines to improve the gearing ratio and the minimum capital that the banks hold with the regulators is a good thing for this industry, and it's also very good for the financial sector.
All right, thank you so much. We hope our investors will run with that. We'll see what happens to the banking stocks at the close of trade today. Thank you so much, Kevin Emmanuel, financial expert. All right, now let's take a break. When we come back, we'll head to the market. Talking about those banking stocks, we may not be able to say exactly how they're doing intraday, but we'll certainly have that. But Anita has news from the financial market after this break. Welcome back to Watching Business Incorporated right here on Channels Television. And just before we head to the market, we have to lead our DSTV viewers to Abuja once again. There are projects going on there today. It's the commissioning of the extension of the Inner Southern Expressway from the Outer Southern Expressway in Extension S-Way Sussex. That's Outer Southern Expressway of Sussex Bridge, and it's in the Federal Capital Territory. So we'll head right there for our DSTV viewers. But for the rest of us, we continue with Business Incorporated, and Anita comes in with intraday numbers.
Yes, good afternoon, Nini.
Good afternoon.
Yeah, okay, but first, before the intraday numbers, we had another downturn on the markets on Tuesday at the close of Tuesday's trading session. Okay, so, but let's get on with the intraday numbers. Intraday, the market is still oscillating in between profit-taking and bargain hunting, as is always with the market activity, particularly on the Nigerian Stock Exchange, where we see a 0.03% uptick, and this is coming from the Tuesday's close, which was a 0.07% downturn, and also picking up from Monday, which we also saw a downturn there. Now moving to the South Africa. For South Africa, before we flipped over, okay, 0.26%, about 0.25% drop for the South African stock market at intraday. Now, on the other side of the market, for the EGX, we saw a profit-taking, a deep impact of profit-taking there, 1.34% pullback on that market. That's the EGX 30. We see 26,610.99 points for that index. And then the Kenya Stock Exchange on Tuesday, 0.21% in the green. That's it for those markets. And now let's take a deeper perspective into Nigeria's stock market, where we see coming out of the two-day strike by the NLC, we saw the impact of no activity there, but the market was open. But at the same time, we saw about a 141 billion loss. Now let's talk to Richard Akimoladu, equity trader at CSL Stockbrokers, to give us more details about the negative start of the market continuing, but we'll know whether this number is continuing at intraday. Thank you for joining us, Richard.
Thank you for having me, Anita.
Okay. Now, we've had two back-to-back declines on the Nigerian stock market, but at the moment, how is the market performing at the third day of June? How's the intraday numbers as we speak?
Okay, thank you. Currently, the market is down. I guess that number you posted was early in the morning, but now the market is down by 0.08%. We saw contributing to that. We saw that some names are down, but Owando is down currently. Wapik is down, and some other names that I don't want to mention. So currently, the market is actually down.
Okay, now Richard, so that takes me to my second question with you. Nigeria's banking sector is still in the news at this time. First, coming from that Heritage Bank, we know Heritage Bank is not quoted on Nigerian Stock Exchange, but now with the news overnight that came from the central bank that it is not revoking any license, which is contrary to a report alleging that the CBN will be revoking 3 bank licenses. So how is the banking counter of the NGX performing at the moment?
So the NGS banking is equally down. It's currently down by about 0.29%. As we mentioned, Heritage is not listed, and going by the CBN pronouncement that no other further license will be withdrawn from the banking sector. So I'm not sure that I believe that the listed banks are actually strong, and I believe that CBN keep checking their books and their numbers quarter on quarter. I believe we should not expect further license revocation from any listed bank for now. And as you know that all of them are gearing up for this recapitalization exercise that's coming up soon. A lot of them are actually putting papers together actually to come to the market to raise funds to actually support their business going forward. So there's nothing to worry about the listed banks. I believe they are strong, and CBN has actually issued a statement.
Okay, so Richard, just 30 seconds, what's your expectation for the market's close for midweek trading session?
We are like an hour to the end of the market for today, and as I've mentioned earlier, that the market is currently down. I believe that the market is going to close in this. Closed down today because there's no positive news that can actually change the tempo of the market. Though it's just the market is just slightly down, and we might likely close at this territory.
Okay, Richard, I think we'll leave it there for our markets, and do hope that although if the market closes bearish or bullish, it favors some investors and vice versa. Well, we thank you so much for your analysis on our show.
Thank you for having me.
I was Richard Akimoladu, equity trader with CSL Stockbrokers, with the market numbers at intraday. Now, let's move over to Middle East, where we see it's kind of a mixed trading for there at intraday. Abu Dhabi 0.26% in the green, while the Dubai FM 0.38%. We see some bargain hunting and profit taking, which is always the language of the market for investors. And on the other side of the market, we see Saudi Arabia 0.23% in the red. That's another day of downturn at intraday, but then market numbers would always have a final close, which may be different from this. And for the Qatari Stock Exchange, we see 0.08% in the green for that market and intraday. So that's it for the market for the Middle Eastern market. And now over to the world's biggest economy, the United States of America. Obviously, the stock futures, they're rising, and this is coming ahead of a private payrolls report, which is due to be out sometime around in a couple of hours from now in Nigerian time. For the Dow Jones Industrial Average, it was 0.12%. As you can see on your board there, the S&P 500, 0.18%, and NASDAQ, 0.43%. Now, what to expect from the market? The market is monitoring data on services and non-manufacturing purchasing numbers, which is due out today. And then attention will also be focused on the weekly job claims numbers, which will be out on Thursday, and the all-important May jobs report due out on Friday. But for more details on the trading session for the close of Tuesday's trading session, let's bring in our Washington correspondent, Maria Bird.
The U.S. stock market was a bit up and down on Tuesday, as the Dow Jones was barely up at 0.15%, the S&P 500 up at 0.36%. The heavy tech NASDAQ also showed a barely up day, closing at 0.17%. It is clear that investors are watching to see what will happen over the next days and weeks ahead, as the economic data is showing a cooling off of the job market. This has some concern for many investors, as this could mean some instability in the U.S. economy. Even though there's still much hope that interest rate cuts will happen before the end of 2024, many investors are still questioning and wondering when the interest rate cuts will happen. This has many watching to see what will happen in the next weeks and days ahead, as it's been quite a challenge for the U.S. stock market over the past few weeks.
Washington correspondent Maria Bird with the market numbers on Wall Street for Tuesday. And finally, on the, first, before we go to the Asian market, let's talk about what led the Asian market into a mixed session, mostly positive. We saw, we've been talking about this all over the world, right here in Nigeria. We also, our president also congratulated the India's Prime Minister, Narendra Modi, for his slim election victory. And we saw the Bombay Stock Exchange leading the Asian markets for the close of Wednesday's trading session. It was up by 2.78%. That's for the Bombay Stock Exchange Index, or what they call the Sensex, the sensitivity index, which gauges the market's performance. So that was it for the market. Now, for the broader side of the Asian market, we see both the Nikkei was in the red, 0.89%. The South Korea's Kospi up 1.03%, while the Hang Seng Index of Hong Kong, 0.10% in the red. And on the other side of the market, although we don't have that numbers, we also saw Australia's S&P 500, S&P 200 closing 0.41% higher at 7,759.40 points, and this is coming after the country's first quarter gross domestic product, that's the GDP, came in at 1.1% year on year, which is slightly below the Reuters poll estimate of 1.2%. So that's it for all the markets that we track for Wednesday.
Yeah, interesting how the India election has fed into sentiment in Asia. Really interesting there, but thank you so much, Anita.
Pleasure.
All right, now let's head to the UK and see what's happening there. Juliana joins us, obviously, from our London studio. Juliana, good afternoon. And it's simple, we're not going to have an end to this Brexit red tape and what it's doing to the UK economy. Now we see the clothing sales to EU is down, and it's obviously connected to Brexit.
Good afternoon, Ina. You're absolutely right. Brexit red tape continues, and it's quite interesting, actually, that although we're in the third week of the UK general election campaign, that Brexit hasn't really penetrated the heart of the debate. But I think now that we've got this data, it is likely going to feature much more as we count down to the ballot on the 4th of July. So online marketplace TradeBite has partnered with a consultancy firm, Retail Economics, and they have been looking at the complexities of the retail sector more specifically. We focused on other areas, mostly with food, but we actually haven't looked at clothing. And it does show that exports have fallen dramatically since our tumultuous divorce from the European Union. So exports of clothing and footwear in 2019 were at £7.4 billion. Now, according to this data, in 2023, it was £2.7 billion. £2,000, which is significant. I think that represents over a 25% slump. And the reason is because of this red tape. There are so many issues when it comes to trading between the island and the mainland that it is costing small to medium-sized enterprises to fall out of business or move their manufacturing hubs away from the UK into Europe because it's so much cheaper for them. But of course, we know that is a significant fallout for the UK labour market, which is really suffering at the moment, particularly when it comes to some of those skills that, of course, manufacturers have. So there are some people that read this data and they say, well, it's a lose-lose. What has actually been gained when it's the SMEs who are suffering the fallout of Brexit? Multinationals, of course, have their issues too, but their bottom line is much bigger, right? And we know that for any functioning economy to survive, you've got to prop up your SMEs. In fact, you know, they are the backbone of any stable democracy. So, yeah, really frightening statistics there. We've had a response from the Confederation of British Industry, which is a huge think tank, very influential. And they're saying that, you know, whoever gets the keys to number 10, you know, must make sure they relook at some of this Brexit legislation to ensure that the SMEs are not bearing the brunt of the divorce for the rest of the country.
Yeah, well, SMEs bear the brunt in every country. I mean, whatever policy affects them more or the most in most economies. But let's head to the markets now, see what intraday numbers are looking like.
Yeah, the FTSE is in good shape at intraday. We've had a couple of positive news. We got the PMI data from the Office for National Statistics this morning. Of course, PMI is a forensic look at particular sectors. We got it for services, which again contributes 80% to the British economy. It's down slightly from where it was in March, but it's still above that 50 threshold. In April, it's come in at about 52.0. That's really cheered the markets. We've also got the new King Charles effigy circulating on Bank of England banknotes, which is quite interesting. I'm sure everybody's going to try and get a hand on that. And then, of course, this is the time for the London Stock Exchange reshuffle. So lots of speculation about what country and what companies are going to fall out of favour from the FTSE 100 and what local companies are going to go from the FTSE 250 and be elevated into the FTSE 100. So yes, lots to play for before close of business. But the all-share at intraday is up 0.11%. The FTSE 100 up by 0.14%. And the FTSE 250, the domestic market, that's down by 0.09%. In the currencies market, the British pound is currently trading down against the US dollar by 0.02%, though it's up against the euro by 0.10% and up against the Japanese yen by 0.63% in A.
Thank you so much, Juliana. All right, let's move to Europe now, where the Commission, that's European Commission, has agreed to a massive payout to compensate an Eastern German region for exiting coal over the next decade. It's a deal that could be a game changer for the country's efforts to decarbonize, following through with the promises of climate change. Lars joins us now from DW to give us the details of this. Hi, Lars, good afternoon.
Thanks for having me, Ini. Well, the German government was relieved to finally seal this deal. The EU has approved a massive payout for the Lausitz region. Berlin will transfer the sum of 1.75 billion euros to that region. That is just a few kilometers south of the German capital. Now, let me tell you something about that place. For decades, this area has been sort of the engine of the state, generating most of its power, mining coal in giant surface pits and burning it in dozens of power plants. Hundreds of thousands of jobs were tied to the energy sector, but of course, it's been clear for a long time that coal was on its way out. After all, Germany wants to completely shut coal-fired power plants by 2038 and become climate neutral by 2045. Now, the government can spend extra funds on helping the region transition. There will be workers who will be let go, others that might have to be retrained. Maybe they can even stay in the energy sector, but they might have to switch to the solar or wind side. Now, of course, that would need an entirely different skill set, and it takes money and a lot of time to provide people with the skills they might need in a post-coal world.
Yeah, but one of the reactions to this is the issue of the timing of this deal. What is it about the timing?
Well, there is no official word, obviously, on the timing, but one can't help to see a connection between this deal and the upcoming elections this coming weekend. Germans will have communal elections where local and state governments will be voted in or out. Also, folks across the continent will vote for the European Parliament. And the EU is not particularly popular these days. It's a huge bureaucratic giant that is moving slowly. It hardly gets anything done for many structural reasons. And as we're dealing with rising levels of populism in many parts of the world, there's voices also here within Germany that have been calling for the country to drop out of the EU. Now, the EU working seemingly efficiently with the German government to protect the economic interest of a major region is certainly one way to make sure that voters will stick with the established parties and just give that whole idea of a strong, united Europe another chance.
Yeah, what about investors? What are they looking at?
Well, we're getting a heap of economic data, both in the US and here in Germany. Also in Frankfurt, the German Stock Exchange will announce a bit of index reshuffling. Oh, and we got some really good news for German chemical and pharmaceutical giant Bayer. We'll have to take a step back here. Over the past couple of years, that company has been found liable for dozens of cancer deaths related to the use of Roundup. That's a fertilizer made by Bayer-owned Monsanto. Now, a judge in the US has ruled that instead of $2.25 billion, Bayer only has to pay $400 million in compensation and fines, and that, of course, is a huge relief for investors too.
All right, Lars, thank you so much for that.
Thank you, Ini.
Again tomorrow. Now let's come back to the continent, Africa, starting with South Africa, where the economy contracted in the first quarter of this year, following marginal growth in the last quarter of 2023. Data from the Statistics SA shows that GDP declined by 0.1% in the first quarter of the year. Power cuts and weak demand weighed heavily on the mining, manufacturing and construction sectors. We're going to have our correspondent join us tomorrow to elaborate on this. But even before then, we have a bit of good news actually coming from there, talking about the PMI, because South African private sector activity grew in May as new order volume stabilized and business confidence improved. The S&P Global South Africa Purchasing Managers PMI went up to 50.4 in May from 50.3. So the good thing is above 50, which is the positive point. A reading above 50 denotes growth. Many companies are confident that demand will start to pick up following the election. So as I said earlier, we'll have Innocent Semosa join us on Business Incorporated tomorrow to tell us about this, as well as some of the outcome and reactions to the election of May 29. Now let's head to Kenya, where the country plans another early buyback of its Eurobonds this year as part of plans to smooth out the nation's debt repayment profile. The East African nation will settle $1 billion of its Eurobonds ahead of maturity, bringing the total repurchases this year to $2.5 billion. And this is according to a report by World Bank. In February, Kenya issued a $1.5 billion Eurobond and spent the proceeds on partially buying back 2024 notes due in June. And that eased the nation's liquidity constraint at the time. It issued the new securities at 9.75% to refinance bonds sold at 6.875% in 10 years ago. Now let's head to the crypto space and see what's going on there. I see the board is really green, like the color behind me right there.
On the screen.
It's, it's a Nigerian color today, to the joy of a lot of investors.
But I see some spots actually greener than the Nigerian flag.
So we have shades of green.
Different shades of green, but it's green, at the end of the day. Bitcoin, 70K, trying to stay above that level. It remains to be seen if that actually holds going forward. But let's look at the top headlines this afternoon. We see Tether CEO is warning of airdrop scam emails right there. According to Paolo Ardoni, the CEO of Tether, cryptocurrency users should exercise extreme caution now, as a prominent email list management provider widely used by crypto firms was allegedly compromised in a data breach. So to safeguard from phishing emails, users should double check the authenticity of the email and make sure they have two-factor authentication on crypto platforms. Then we see Qatar, they've announced the CBDC projects. The central bank recently announced the completion of the infrastructure development supporting an in-house built CBDC. The bank estimates that project will enter its experimental stages this year in October, allowing several national and international banks to test the functionality of the pilots by facilitating large payments among them. Well, a couple of countries are launching their central bank digital currencies, the likes of Qatar and Israel, and others are launching the first phase of their project. Let's talk to Dr. Iwa Salamina, Associate Professor of FinTech Law Regulation, University of East London. She's also a member of CBDC Academic Advisory Group, Bank of England and HM Treasury. Good to have you on the show.
Thank you for having me. It's a delight to be here.
Right. So in your opinion, looking at countries that have launched central bank digital currencies so far, is it encouraging for more countries to, launch new projects, at this time, looking at adoption?
So I think the idea of launching a CBDC is different for different jurisdictions across the world. So whilst for emerging markets, developing countries or poorer economies where you have an issue with financial inclusion, there's a rationale that CBDCs would ideally facilitate financial inclusion, i.e. financial inclusion here meaning that ordinary citizens, or particularly those at the bottom of the pyramid, which is basically poorer people, would be able to have, who do not currently have access to bank accounts, for example, would be able to have access to a CBDC wallet that's, if one is launched, if you like, by the central bank, and therefore giving them the opportunity to be able to engage in different types of transactions that they wouldn't have ideally been able to engage in without this opportunity. Whereas in other countries, it's totally different. So for other countries, for example, it would be a question of sort of, facilitating the idea of financial innovation and particularly also sort of enabling individuals, companies, organizations that actually want to transact in digital assets to be able to do so, but do so in a way that, that in a sense doesn't jeopardize the sorts of things that central banks are interested in, which is, financial stability and monetary stability. So for example, in advanced markets, we're seeing so much the era of tokenization, which is basically the representation of real-world assets on blockchain-based systems in order to be able to make them easily sort of transferable and the like. And for that, central bank digital currencies really can serve as the anchor for these new forms of digital assets and digital currencies. So basically, the idea of really ensuring that the central bank does what it's really set out to, what fulfills one of its functions, which is to facilitate financial stability and monetary stability.
Fantastic. So definitely Nigeria led the pack when it comes to launching a central bank digital currency. We had the e-Naira launch in, I think, 2021. But looking at other countries, we see them in testing phases for so long. I know the Bank of England, they've been working on central bank digital currency for a while now. Talk to me about the e-Naira, the adoption so far, and was it launched too fast or too soon?
Well, obviously, the announcement that the e-Naira was going to launch obviously came as a surprise to a lot of people because we didn't see it coming. But in hindsight, from what we know, we know that as at last year, I think it may have been about sort of February 2023, the central bank did announce that they were changing their technology provider. And that, for example, was an indication that maybe the country wasn't very well ready to actually launch a CBDC, a central bank digital currency, because of course we know that in order to be able to launch a central bank digital currency, you would have sort of worked out all the technological infrastructure and once sort of midway, or I'd say maybe 2 years after the launch, as is the case in the situation with the e-Naira, want to change the technology provider. And beyond that, there's been other sort of situations or challenges, shall I say, with the e-Naira. So there's been this, poor adoption of the e-Naira, partly because, citizens are skeptical about the e-Naira and what the central bank can see through their transactions. And I have to say that this skepticism isn't just peculiar to the Nigerian situation. It's also a skepticism that cuts across all the countries actually that have launched or that are planning to launch a CBDC. So it basically, it's a question of the central banks really trying to, in running their campaign as to how CBDCs would work, is ensuring that they kind of allay the fears. And not just only that, also ensuring that they actually have the technological infrastructure to cater for those concerns.
All right, but before I let you go now, when do you think the world will fully embrace central bank digital currencies? Because we know crypto enthusiasts, they still rely heavily on stable coins.
Sorry, I didn't hear your question. You're breaking up.
When do you think the world will, the financial world will, embrace central bank, digital currencies, because we see the crypto guys, they love their stable coins a lot right now.
So I think it's so important that citizens are aware of what is going on. So we're very quickly moving into an era of tokenization, which is basically the tokenization of real-world assets. And that's the representation of these real-world assets onto blockchain to make them much more digital, easy to, as I said, easy to kind of exchange, transact with, and the like. And when we say the tokenization of real-world assets, we're really talking in terms of things like tokenization of shares, bonds, land, even deposits, bank deposits. And when we talk about, when we're seeing these developments, it's so vital that the central banks can actually play a role here in ensuring that financial and monetary stability is safeguarded, if you like. And central bank digital currencies are really the best placed to ensure that, to anchor, if you like, these new forms of digital assets and digital currency. So it's so vital that the CBDCs actually emerge. Because in the way that we're seeing financial innovation develop, it's very clear that if in the context of Nigeria or Africa, it doesn't happen in the next, 10, 15 years, it's very likely that that's the trajectory of travel.
Okay, we'll definitely keep tracking development and adoption. Thank you so much for coming on, Dr. Iwa Salami, Associate Professor, FinTech Law and Regulation, University of East London. Thank you.
Thank you for having me.
All right, so there you have it. At some point, when you want to buy land, you might have to, buy it on a blockchain and get your title uploaded, on the blockchain, and nobody's going to be able to take your land from you, at some point.
Yes, exactly.
Maybe we'll see lands in Lagos, right?
For CFO and filling forms.
You just have it there on the blockchain, your title right there.
It's still in the future, laddie. You need
still
to come back to today.
All right, but right now,
you need to live in today.
Yeah.
All right, laddie, thank you, and that's it on the program. Thank you so much for being a part of Business Incorporated today. Remember, you can watch Business Incorporated, Business Morning, anytime on our YouTube channel. We'll see you again tomorrow, but before tomorrow, meet me tonight for the Stock Exchange report.